It's a general agreement that the second quarter of 2022 could not be as rosy as the first for Tesla stock. This could even result in Tesla's stock price taking a hit. In a recent report, Tesla shares fell more than 12%. So what's in store for Tesla and its investors in quarter two? Let's dive in. Join us today in this video as we look at the future of Tesla stock. Tesla has a nearly 70% market dominance in battery-powered electric car sales in the United States. The company's flagship Model 3 is the best-selling EV in the United States. Tesla, which has earned the reputation of a gold standard over the years, is now a significantly larger business than when it first went public in 2010. With its market worth topping $1 trillion for the first time in October 2021, the market capitalization of the EV king is greater than the combined worth of traditional manufacturers like Toyota, Volkswagen, Daimler, General Motors, and Ford. Tesla has altered its focus from manufacturing specialty items for wealthy consumers to producing cheaper EVs for the general public. Tesla went public in June 29, 2010. Tesla issued 13.3 million shares at $17 per share. On the National Association of Securities Dealers Automated Quotations, NASDAQ, it raised a little more than $226 million in all. Tesla's stock price remained virtually consistent and constant for several years following its initial post-offering in 2010. There wasn't much happening. The company had a near-death experience in 2008, and it was selling only one car in the run-up to the IPO and afterward, the original Roadster. The idea was for CEO Elon Musk and his team to keep the lights on enough to launch Tesla's first automobile from the ground up, the Model S sedan, which occurred in 2012. The Model S was voted Car of the Year by Motor Trend in 2013. Tesla's stock price soared at this time. If you bought Tesla shares soon after the IPO and held it, you'd be looking at 1,000% or more return today. Tesla's stock price history has been marked by significant volatility since its meteoric rise in 2013. However, a constant stock price was neither expected nor projected. Investor confidence would rise or fall with each news event. Product launch or delay, quarterly earnings report, and market-moving tweet from Elon Musk. Musk himself stated that the company's stock price was inflated. Unlike the rest of the sector, Tesla was operating more like a Silicon Valley tech firm, with its sluggish, predictable stock price behavior for publicly traded car makers and extended business cycles. Analysts focused on the delivery rate as the strongest predictor of how Tesla's stock price progressed. I wondered if there was enough demand for Tesla electric cars in the market that didn't desire them to justify the massive valuation. Tesla eventually began publishing quarterly sales, mostly to provide Wall Street analysts and stock investors with information. The long-awaited Model X SUV was added to the lineup in 2015, increasing sales and providing Tesla with a car to compete in the expanding crossover market. However, the Model X came 3 years late, and due to the car's enormous complexity, Tesla spent the first half of 2016 resolving several manufacturing concerns. The unveiling of the Model 3 mass-market car provided some consolation. Tesla rapidly received 373,000 pre-orders for the vehicle, which cost $1,000. The company's stock hit its record high in 12 trading days in the last year. The value of the then tiny player in the normally difficult heavy metal bending business soared by nearly $400 billion thanks to global investors. During that time, Tesla's market capitalization increased by the most in the history of stocks. Tesla's shares skyrocketed after reporting a good third quarter profits on October 20 last year. 2 days later, its value surpassed $1 trillion for the first time. Then, in a single day, news of an agreement to sell 100,000 electric vehicles to Hertz pushed the stock up 13% to $1,025 per share. Tesla reached an all-time high of $1,209 on November 1, 2021, thanks to momentum from a contract that CEO Elon Musk claims has no influence on our economy. In 2 working days, Tesla's market value surged by $392 billion, from $818 billion to $1.21 trillion. The 4 prior members of the trillion-dollar club had similarly seen significant, rapid increases in market worth during the blazing bull market for tech and social media in 2020. Despite the fact that Apple, Microsoft, Amazon, and Alphabet all started with more than $1 trillion in October 2020, far more than Tesla did when it began its $400 billion trending sprees, none of their climbs surpassed Tesla's. Remember, we're talking about a company that's a fourth of the size of Microsoft, 1/8 of the size of Apple, less than a fifth the size of Alphabet, and 1/10 of the size of Amazon at the time. It is the tremendous Tesla stock gains that made Elon the richest man. Tesla delivered 310,048 vehicles in the first quarter of this year, increasing 68% from last year and barely shy of analyst expectations of 312,000. Tesla's profits per share increased 246% to 3.22 per share in the first quarter, while revenues increased 81% to 18.76 billion. Both have experienced increasing growth for the second quarter in a row. This includes $679 million in regulatory credits, which has been doubled since the fourth quarter of 2021. Twitter stock price has risen. Tesla's Berlin facility debuted on March 22nd and started shipping Model Y vehicles. Its Austin factory, which will also produce the Model Y, was launched on April 7th. The automaker has stated that it will sell 1.5 million new electric vehicles in 2022, possibly increasing to 2 million if supply concerns are resolved. This would be more than twice last year's total. However, the crisis in Ukraine and ongoing component shortages will make meeting delivery objectives difficult. Tesla stock has dropped nearly 20% since Musk originally revealed ambitions to buy out Twitter and take it private. This is a major reason why Twitter stock is presently trading more than 10% below Musk's planned $54.20 per share. The Twitter stock is now trading around $47.50. That's just slightly more than the $46.76 midpoint between Musk's takeover bid price and $39.31, the price at which Twitter shares were trading when Musk initially revealed that he had bought a more than 9% interest in the company earlier that month. This appears to indicate that the investors were skeptical that Musk would complete the transaction at the original price, even though he had recently secured more than $7 billion in financing from an impressive group of investors that included mutual fund powerhouse Fidelity, venture capital behemoth Sequoia, and Oracle co-founder Larry Ellison. Musk also has a promise from Morgan Stanley for $12.5 billion in funding, backed by margin loans secured by his Tesla stocks. Tesla stock dropped only a day last month in April 2020 after the Twitter ordeal. The drops came only one day after Twitter's board of directors authorized Musk's $44 billion takeover of the firm, suggesting that some of the drop is due to investor worries about the deal. Musk has a total debt commitment of $25.5 billion, including $12.5 billion in loans secured against his Tesla equity. There is also $21 billion in stock in the acquisition. Tesla investors seem to have been concerned about the potential distractions that owning a platform like Twitter may bring Elon Musk. Twitter transactions have dangerous elements such as billions of dollars in personal debt. If things go wrong, Tesla stockholders may suffer and Twitter's financial stability may be jeopardized. However, these fears remain unconfirmed since Musk has shown that he can grow two major successful firms at the same time. Tesla sells significantly more electric automobiles than any of the competition, and SpaceX is a top rocket company, so these worries are unfounded. He may also be able to increase Twitter's popularity and profitability. Tesla Inc. shares fell further in April, finishing down, and Tesla stock lost 24% of its value in April. A large portion of the loss may be attributed to CEO Elon Musk's Twitter acquisition saga, which has created a chance for investors to buy Tesla shares on the cheap. May has begun with one potentially concerning omen, and it has nothing to do with Twitter. Should you avoid Tesla stock, given the long slide it has undergone during April? On the contrary, if you've been considering adding shares of this EV powerhouse to your portfolio, now's the moment. Tesla stock has been heavily undervalued in April, owing mostly to Elon Musk and Twitter, a distraction that will soon fade. Alright, that wraps up this video. Remember to subscribe to our channel with all notifications enabled so you don't miss out on the latest news about Elon Musk, Tesla, and SpaceX. Thanks for watching, and I'll see you in the next one.